Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. I'm Garrett Palmer, joined here by Andrew Hall and Ben Nye, and today we're going to be talking about Apple. It's been rumored for a while that Apple, obviously has enough cash to make an acquisition. It's just not in the United States. We were just going over some cash numbers that they have $246 billion in cash, $87 billion in debt. So what's that,
158 net.
$158 billion in net cash. So Ben, I'll start with you. We'll be talking about some high growth company acquisitions here. We'll probably make another video later of more stable companies that they could acquire, but what are you thinking with high growth companies?
Well, it's whatever they would buy, they would have to be paying an exorbitant amount for. But if the company they're buying is cash flow positive, technically it's still accretive to them because they're not making it much on the cash. So they could argue that this is going to be an accretive acquisition. I think that's what they said when they acquired Beats. And so once you accept that they could potentially acquire something with a huge multiple to earnings, it's kind of like it gets kind of fun to anticipate, what could Apple actually buy?
Yeah, I think that's what's fun is because you start to think about all this cash and you start to think of the challenges of bringing it back into the United States, paying $50-60 billion in tax just to bring the cash back over to the U.S. And then you say, okay, well then what's the cash doing right now, earning pennies on the dollar, if that, with interest rates being what they are and really what we expect them to be for the foreseeable future. So just about anything that's cash flow positive is attractive, even if they're overpaying for it, so to speak, because they're at least getting some juice. And that really opens this thing wide open.
Yeah. So I think starting with some high growth companies, I think is good. So let's start in the auto world. We have on our list here we have Tesla and Uber as potential acquisitions. Tesla, interestingly, valued at about half the valuation of Uber on the private market. What do you think about Uber's valuation? Do you think that would make a good acquisition for Apple?
I actually think it would be attractive for a couple of reasons. Obviously, the valuation is insane. It's hard to really get behind that valuation on something that's trading in the private equity markets. But at the same time, I think the other thing that it lends itself to is kind of Apple's broader ecosystem platform, which says, hey, if you make a really disruptive technology and you put it in an application form, we might be your acquirer. Right. And I think that would be really encouraging and really positive to the startup world in general. So you contrast that with something like Tesla that says, okay, well, if you do something totally unrelated, not using Apple technology in any way, maybe Apple comes in and sweeps you up. You contrast that and say, no, this is actually kind of dangling a carrot in front of everyone out there that's developing apps or anything that's, relying on Apple platforms in any way. That would be really attractive, I would think.
Imagine if they bought Tesla and Uber. The synergies with that would be phenomenal.
And that'd still only be about half their cash.
Right.
Was it Tesla engineers that were going to Apple so many months ago, or was it Apple?
Apple was going to Tesla, and then Tesla was bragging about how they're taking on the good engineers.
So if they merged, there'd be some awkward
reuniting
in the workspace.
But if one of the things that we found an internal Salesforce presentation that was leaked by the Wall Street Journal last year. And one of the things that they were looking at when it came to acquisitions was the Glassdoor rating of the CEO,
right? Which
is pretty interesting. So if you start thinking about, well, what management team are you acquiring? With Uber, with all this, with all the mess that they've been getting into lately, I don't think you're going to see that going to be a huge asset to Apple, which is perhaps one of the most politically correct organizations around. However, if you look at them bringing on Elon Musk, and then when you think, well, what premium to an Apple valuation would you place on Elon Musk joining the company? Is that worth 1 time's earnings? Is that worth 2 times earnings? And all of a sudden, you're making the money back on Tesla anyway. couple with that, how much money are they spending on this Apple Car initiative? They can circumvent that completely.
I have a really hard time picturing Elon ever going under anyone else's umbrella. I mean, it's just almost impossible to imagine that. I mean, he's got this massive strategic plan. He's going to take over not the world, but the universe. It's really hard to imagine him swallowing his own pride and instead of gobbling up failing companies, which is kind of his MO, and these really outlandish initiatives, saying, you know what, yeah, fold us into your operation. It's hard to picture that happening. I mean, everybody's got a price, but it's hard to picture that happening.
Unless Apple created a dedicated fund.
Yeah.
$50 billion.
Go play.
Go to Mars. Yeah. And just shoot him off to Mars. And then not have to deal with him. So you have that. Another space company that they could acquire. This one would be a huge acquisition. The investment bankers would absolutely love it. It's if Apple acquired Amazon. So Amazon right now has a $400 billion enterprise value. Put a 20% takeover premium on that, and you're talking a $480 billion acquisition, which seems like a huge number. But when you're talking about $158 billion in net cash at Apple, huge free cash flow, coupled with Amazon's growth potential, you could see a cash plus equity plus debt deal actually. I mean, it's possible. I mean, I'm not going to say it's going to happen, but it's possible.
You heard it here first. Yeah, I definitely think it's one of those things that starts to sound absurd, but then when you scale the numbers all back, if these were smaller companies, you'd say, yeah, I could definitely see this happening. And what's interesting, you mentioned the cash flow. I mean, Apple's increasing their net cash by, 30, 40, $50 billion every year. So it wouldn't take long to recoup that. And then you look at what's interesting there is, I mean, obviously you have two giants, but what's most intriguing to me, at least from a storyline perspective, honestly, is just the content rights that could be owned across those two platforms. And you take two somewhat competing services in terms of what Amazon Prime is doing with media, whether it's music, TV, movies, all that kind of stuff. You add in kind of that iTunes network and everything that they've done there. And all of a sudden, I mean, you've got a giant. I mean, you want to talk about something that could really just quickly gobble up another company on our list like Netflix.
Right.
They would certainly be in a position to do that because they would have such a corner on the market of distribution. All of a sudden it becomes almost Apple/Amazon and then everything else.
And from a back-end perspective too, you'd have the development platform on Apple coupled with where everyone is storing their developed content. Amazon, I mean, Apple would literally control an increasing amount of the enterprise base, which is what they want to do.
Right.
And that would put them in a great position to compete with Microsoft and Azure and those services as well.
The challenge, I mean, obviously there's many challenges to it, but one of the challenges with Amazon would just be what's happened to the market cap over the last 2 to 3 years. I mean, it's just run. Apple's been sitting on a lot of cash for quite a while. They're continuing to stockpile that and accumulate it and drive that number up. But acquiring Amazon, in 13 or 14. A little bit more reasonable now that the stock's really taken off. It becomes a little bit more challenging.
And you do, but then you also have that CEO thing. I don't think the reviews for Tim Cook are very good so far. I mean, he hasn't really come out with a new product, the Apple Watch, I guess, but that's not like the iPhone. I mean, that's not a groundbreaking product. If you brought Jeff Bezos in and made him, your go-to guy, moved Tim Cook back into operations, where he came from, and Bezos was kind of your idea man, your Steve Jobs almost. You could again see that valuation increase per dollar of Apple earnings.
I will say you mentioned the Apple Watch. Garrett and I were at a compliance conference a couple weeks ago up in Washington D.C. That was the per capita capital of the world in terms of Apple Watches.
Really?
I mean, just like 4 out of 5 chief compliance officers wear an Apple Watch.
Really?
I'm pretty sure. So shout out to the compliance folks.
So if you want to be cool like a compliance officer,
get an Apple Watch.
Get an Apple Watch.
Keep tabs on people.
Yeah.
Real-time alerts.
Netflix. We touched on it earlier. Now we're getting a little more into the content realm. What do you think? Right now the market cap $62 billion. they would probably require, I mean, their volatility of the stock has been so enormous that I think they would require a 30% premium, which would put them at $83 billion valuation, which is still half Apple's net cash.
Yeah, it's interesting you mentioned that volatility. I mean, part of me feels like if you had, you could almost structure a stock and cash type deal for Netflix shareholders, limit some of that volatility, and maybe not pay as much of a premium. Because that stock, I mean, it does. It's just all over the place. And it seems like you kind of show some patience, get this thing at a more attractive thing when you see global, active users have a less than stellar quarter. That's the number everybody seems to watch, really, is to see what's going on there. Again, it's an interesting content play. I mean, I think if you're looking for content, that would be one way to skin the cat. The other way would be to go into a more traditional acquisition, looking at something like Time Warner that has HBO and all its platforms. I think that, if you're going for a pure content play, I would be a little bit hesitant right now if I was anybody, just because I think we're probably in the second or third inning of channel-specific, over-the-top apps, things like that. Whether it's HBO Go, Showtime, Anytime, Watch ESPN, all those things. I don't think we quite know enough about the adoption of that and the threat that would pose to a Netflix, which really is kind of a one-trick pony. I think I'd be hesitant to go there, but at the same time, again, you just look at the ease with which Apple could snatch them up and integrate that, and probably add some profitability there.
Yeah, no, I think you're exactly right. And then you also have that entrenched base. Maybe you can, if you actually have the Netflix code, you can make the app run even faster. I think Netflix has done a great job, and probably their most underrated asset has been being able to funnel that streaming content so with such great quality over really any line. I feel like they do a better job on that in that regard than even Amazon does.
Yeah, I agree.
So then we kind of get into the more enterprise space with Salesforce and Workday, both enterprise applications essentially. Salesforce, Mark Benioff has the highest CEO rating on Glassdoor of the companies that we looked at, 98%.
Convenient that Salesforce says they look at the Glassdoor rating. So.
Right. So this would be a way to, Apple's really wanted to, they've done a tremendous job in the consumer market. They kind of started with the iPhone and then broadened out more to Macs as well. Even though Macs was the first product, iPhone was kind of the introduction drug, if you will. But they've struggled a little more in penetrating the enterprise space. If they were able to purchase a Salesforce.com and Workday and get those ins with, it's not like they don't have ins now, but if they're able to incorporate that into their service in a more of a streamlined and efficient way, that's something that you could add some value to what Apple provides for the enterprise.
Yeah, I still think they're relatively unsaturated in that space. I mean, you look at the cross-section and say, okay, what percentage of the working population uses an iPhone versus what percentage of the working enterprise population is using a Mac computing program, or hardware. It's not the same,
right?
Not even close. And so that's kind of interesting. I mean, I think that's certainly a growth opportunity for them, whether it's through an acquisition or just through continued efforts there. I mean, obviously we've seen with other companies that we've talked about, whether it's Microsoft or IBM or Intel, what have you, the upgrade cycle is not quite what it used to be in terms of what you see growth there, especially on the enterprise side. But at the same time, if you're not doing a lot there, you can kind of get that incremental growth in that volume there.
Now, if you were Apple, what would you do? Would you buy the giant in the room, the Salesforce.com, or would you kind of buy the upstart, the Workday?
I think I'd go more upstart. I mean, one thing that was interesting, Sam and I, Garrett and I went to a conference 2 weeks ago. Sam and I were at a conference last week, and they were talking specifically about wealth management and CRM platforms. And in our industry alone, I mean, Salesforce is not the most highly regarded. It is one of the more widely used CRM platforms for investment advisors, but it is not the universal leader, which I think 2 years ago it probably was. It seems like a lot of people are starting to kind of get into that space. So you kind of wonder if they're going to be able to continue to be the dominant force, and maybe they do. Maybe they control, market share, but it does seem like they're still giving up market share.
Or if you're talking about, the acquisition value for a Salesforce.com would probably be around $75 billion or something. how why is it so difficult to build a platform like that? Shouldn't you be able to build it for a lot less and acquire a Tesla while you're at it?
Yeah. Yeah, it seems like that's a space that if Apple wanted to get into, they could do so organically.
Right. Last kind of on the product side, the Adobe. I mean, the stock has run from 40 to 110 almost in a straight line. For the longest time there was that huge fight between Steve Jobs and Adobe, which has kind of faded a little bit. You couldn't play Flash videos on your iPhone for longest time. But that's faded, and Adobe does have some overlap with a lot of existing Apple customers. I'm not sure if you need to, if Apple's that scared about losing existing customers enough to buy something existing customers use. But if they were, that would be something they could look at.
Yeah, I echo that sentiment. I don't know that it's necessarily a call to be defensive there.
Right.
Yeah, I don't think they're quite as worried about it as other places.
One of the positives on Adobe, though, I would say, is that they have huge gross margins. The margins are in the 80% range. And one of the biggest hang-ups a lot of people have about Apple is how can they possibly add sales growth while still maintaining gross margin in the current range of about 40%. And Adobe would certainly help with that.
Another positive to Adobe, Tusk Media edits the video through Adobe Premiere.
You heard it here first.
We actually moved from Apple
Yeah, we did.
Movie Editor to Adobe Premiere. So,
wow. So if you want to win us back, you might have to acquire us.
Yep.
Maybe they'll acquire Tusk Media.
There you go.
Yeah.
High growth.
The high growth. Infinity growth, 0 to 1.
Yeah. Yes. The audacity of zero is certainly on our side.
Last one we have is the high growth players. And this is one where we kind of bounced about. Is this a high growth or is this an established player? T-Mobile, telecom provider, they have amassed quite a bit of debt and just trying to play catch up with Verizon and AT&T. They've done it fairly well. They're acquiring lots and lots of users. They've improved the performance of the network. If you get T-Mobile, you also get John Legere, who a lot of millennials like. So he has a 97% CEO rating on Glassdoor for what it's worth. It would be expensive though. I mean, you're talking almost $100 billion in order to acquire a telecom company.
Yeah, and the challenge here becomes, obviously you think about Apple, you think about the iPhone, the biggest product in the history of mankind. There's something to be said still though for the oligopoly that we have in the mobile phone industry as a whole.
Yeah.
And it seems like if you have something that's clearly working the way the iPhone is, at least on a broad sense, maybe expectations might be higher than they should be, or you want this or you want that. Feature-wise, there's always things you can nitpick, but when you have something that's been so successful, the last thing I think you want to do is mess with any of your distribution channels.
Yeah.
And it seems like an acquisition of any telecom provider could ruffle some feathers with Verizon, with AT&T, and all of a sudden, you're throwing a little bit of a kink in your system. So that would be a challenging move, I would think, in terms of PR. Now, I guess you could play the other side of the coin and say, hey, AT&T, Verizon like that a pure player that was competition is now out of space, and they're now absorbed by one of our biggest draws, which is Apple. That could be a benefit to both of those companies. I'm not totally sure how that would play out, but it would certainly have it seems like some political ramifications.
Yeah, and the problem I would see too is that you'd have the deal go through, and then you'd have to, hide it almost. Because if your T-Mobile base, because you'd obviously want to promote your iPhone more and more and more, especially in the T-Mobile stores. If you're doing that, consumers will come in and they're smart and they're saying, well, big conglomerate Apple just bought T-Mobile, so now they're just trying to force apples at me, as opposed to pears or oranges or anything. So you have that piece of it too, which could actually turn people off from T-Mobile and say, wait, this is not that fun, edgy brand that I thought I was signing up for. So those are our high growth names. I think so. We're doing another part of this, right?
We're going to do a video later on more steady companies, bigger companies that Apple could acquire. So stick around. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.